Hello, this is Rich Morrison, and welcome to my latest edition of the Thinking Cap, where today I'm going to talk about what I wrote about yesterday in my market report, and that is using call options right now on the corn market. Uh, you can only write so much. I thought it was better to take a little time and talk about it. You can listen to this and make up your own mind whether you think this is a good strategy or not. But I guess I'm always looking at the screen trying to figure out what's the thing to do right now. And to me, this makes the most sense. For those of us, especially, who haven't marketed a lot of our corn crop this year, and I think that probably is a lot of us right now. So here's a snapshot of the front page of yesterday's market report. And if you look over here on the left in the heat check column, you'll see I've got December corn, July corn, we've got all the wheats as well. These markets are all pretty oversold at the moment. Technically, you've got December corn had the RSI at 40. Stochastics were down in the 20s. We've continued to struggle to try to trade above the 9-day moving average. So I don't want to be a seller right now, even though we're in that window from May, usually till the middle of June, where the markets typically give us our best opportunities. So far, that hasn't been the case. And so I decided that to me, I like the idea of buying call options today, and I call them courage calls. And the idea behind a courage call is that it gives you the courage to go ahead and make sales when the market rallies. And oftentimes, when the market starts to rally in June, the reason it rallies in June is because it's hot and dry somewhere. And if it's hot and dry where we're at, you don't want to sell because you're all of a sudden starting to question how good the crop is. If you own call options, a call option gives you the right, but not the obligation to own futures at a certain price. And so if I own call options, let's say at $5, then if corn goes to 470 and I sell it and I'm wrong and the market keeps going higher, those call options are going to be making money. They'll protect you back to the upside, so give you another second chance. And so to me, they give you the courage to make the sale. And to me, the biggest value this time of the year in owning calls is that right there. It gives you the opportunity, gives you the courage to go ahead and make sales that you know you ought to be making. And so with the market oversold right now, I mentioned the RSI stochastics way down right now. We're near the near term low, 30 cents below the insurance price. Historically, this is the time of year we get a rally, but we haven't seen it yet. So with this market so beat down at the moment, I think it's a great time to own the calls. These were some of the values last night. I'll update them here in just a minute. But you can see that a December $5 call was 12 and a half cents. You could go to a short dated one. I like the idea of these short dated options because if I'm going to be making sales, it's going to be here over the next 60, maybe 90 days. I don't need this to spend the extra money to have the time value all the way out to November. Maybe the end of August, maybe the end of July makes the most sense for me. And so I don't need to spend the extra money. If I'm willing to spend 5.5 cents on an August $5 short dated call, what's the worst case scenario? Worst case scenario is I lose 5.5 cents. Best case scenario is the market rallies. I sell some corn. Maybe the value of that option goes up at the same time, and I make a little bit of money on the option. But the true value to me in buying these options is that it gives you the courage to sell the corn. So if you look at December futures tonight, this morning, this is on Thursday morning. I just updated these charts at about 10:30 in the morning. You can see where we're trading, 437 and a half. We're back within a couple pennies of last week's low. Uh, the lowest we had traded since clear back in December. We've got a doubled bottom at 428. Maybe outside chance we go to that level. You see the RSI now down to 36. Stochastics down in the teens this morning. This market's beat down pretty hard right now. Why? Well, we're getting rain in dry areas of the Midwest at the moment, or that's coming into the forecast right now. So I think that's a big part of it. The government told us we're going to plant 95 million acres of corn. We'll see if that does end up happening. We've still got some areas in the Ohio Valley and to the east where a lot of corn hasn't been planted because it's been too wet. So, and the balance sheet looks fairly comfortable as we head into the new year. So, all things considered, I would rather be a buyer right now than a seller on December corn. if you look at the ending stock number from the report on this week, USDA projecting we're going to end next year out at 1.8 billion bushels. They told us that we were going to end this year at 1.415 billion bushels. So if that demand is truly there on through 25, 26, it's going to take 95 million acres plus a great yield just to get to 1.8 billion ending stocks. So I could certainly make a case that if we get a scare of some sort, this market should have some pop to it. Looking at the world numbers, the United States is expected to grow this year on our stocks, but you look at the world numbers, you take the US out, Brazil, big time growth right now. And that's what this one shows. This shows the other exporting countries besides the United States. Brazil, big crop this year. Well, that's great, but they're using so much more in ethanol production right now. You can see what their ending stocks are expected to be. Argentina had a good crop, nice, but they don't grow a lot more one year into the next. Ukraine continues to have its issues. Now, if the war ends and maybe within a year, two or three, they start to build stocks back up, but that's not the case just yet. So outside of the United States, you don't have that extra supply of corn. And if something happens in the United States, we could certainly get tight in a hurry. The funds have taken all of their chips off the table. If you look at their net position through middle of last week, they were barely long. I'm guessing as of today, they're short, probably somewhere between 50 and 100,000 contracts of corn. So maybe prematurely. You look back at the green line here in 2023, they sold off at the 1st of May, got a weather scare in June, went back to the long side, went back long again in July. So even though the numbers would suggest that we're going to have plenty of corn, it doesn't take a lot to get a scare right now this time of the year. So again, another reason I like this call strategy. If you look at the historical patterns, now's the time we ought to be talking about making sales. May, June is our best window usually to make sales. This year, not the case. And, the big reason for that is this big acreage projection. We haven't had that in all these other years. If you look at the last 5 to 10 years, normally we don't see this big pop in acres that we're seeing this year. And I think that's why the market is taking its risk off the table. Bottom line, there's not much risk premium, if any, in the market right now. And so looking out to the summer, the latest forecast for drought, still talking about, the upper Midwest, even though we're expecting rains over the next 7 days, that area is expected to actually increase in drought severity during that point in time. So we're not out of the woods yet. We're going to have rains throughout the growing season. And we do have some areas that are continuing to struggle maybe as we go into summer. So again, all the reasons why I think we could get some sort of a rally at some point, and all the reasons I think owning calls today at this level makes sense to me. And so if we look at the options trees here, I had the numbers in last night's report. These are the actual option trees. What it tells me, there's so many possibilities you can look at. If you look at the calls on the left-hand side, these are the December calls. The one thing about December call options, they're going to expire November 21st. That's 190 days from now. You can go buy 440 is right at the money. 440 call is 28 cents. I don't want to buy that because A, it's too expensive, and B, I'm not going to sell corn today at 440. I might start at 470, but I'm comfortable probably owning a $5 call, let's say, for 11 and 3/4 cents, call it 12 cents. That gives me upside protection above $5. But even if the market starts going up, the value of that call is going to increase some as the market goes up. The delta tells you how much. And the delta over here on the right-hand side says that a $5 call, if we were to go up a dime, it's going to go up about 7.5 cents, 7 1/3 cents. So as you get the next dime, that delta is going to get even bigger as you get closer to the money. So that's going to give me some protection. If I want that time protection all the way out to November, I can buy this December option. I could go out to a short dated option. And what we mean by a short dated option, that you're just buying less time value. These are still based on December corn futures. So all of these options are going to be based on December corn. I'm just buying less time. The September short dated option will expire in 99 days or August 22nd. That might be a good alternative. And if you look at the $5 option here, it's only 7.25 cents. So I'm saving myself a little over 4 cents a bushel by going out that far, by going a shorter distance. So that might be a great option. I think it is, to be honest. 7.25 cents. Or if I want to, for the same money, I could back up to a 480 call, which gets me into the money that much quicker. Then the other next step is, where do I want to make my sales? And maybe I should have looked at that here a second ago. Where would I want to make sales in December corn? Well, to me, the most obvious number is 470. We got to 469 and a half back in April. 470 is the insurance price. One of the things when I market, I always like to try to beat the insurance price because then I'm improving on my dollar guarantee. The high was up close to 480 that we had during that run back in February. So, in that 470 to 480, I think I'd want to get pretty aggressive making some sales. And so maybe that then comes into play when you're thinking about where you want your option protection. If I buy a 480, if I buy a $5 and save a few pennies, they're still going to protect me. The $5 still has a delta close to zero point 0.8, so almost 8 cents for a dime move in the market. I could go back another month to August short dated options. These are going to expire July 25th. 71 days. Why is that a big deal? Well, I think the 25th of July gets us through pollination in just about all of the country. So if that's my goal is to be, and plus your normal selling window is usually over by then. And so maybe I save a few pennies by going back to the August. That $5 one's only a nickel right now. That's cheap to me to give me that courage to go ahead and make sales when the market rallies. I could back up a little bit, go to 470, which isn't, maybe my target. That's 9.5 cents. The September one, just that extra month, that starts getting you into earfill a little bit more. And so that, you could make a decision one way or the other, how much time you think you need. Either the August or September, those make the most sense to me. Again, the delta on a $5 here, about 0.82. So you're going to get some money if the market starts to move right now. And so I think this is a great alternative, great marketing deal right now. Normally, I don't like just spending money. I like to get something back for it. But to me, this 5 to 10 cents a bushel that I'm spending it to buy myself the courage to make the sales when the market rallies. Uh, I guess I said this at one point in time. I continue to say it, the true value in buying the call option isn't whether it makes money. It's the true value is if it gives you the courage to make the sales. And that's where I think we're at today. I don't want to be selling corn right now. I think this market's beat down too far. I think you've got a good opportunity down the road. I think I want to be able to take advantage of it when it happens. So with that, thanks for listening to this edition of the Thinking Cap. Hope you have a great day, and we'll talk to you again very soon.